Hello, traders. Welcome back to the Easy Forex Strategy. Today, I've got something special for you. We are going to learn the only trading strategy you need to ace those prop firm challenges in 2024. Buckle up, because we're about to unveil all the rules, entry model, and the game-changing pattern that could make you a successful trader. But before we can begin, make sure you hit that subscribe button and ring the notification bell, so you never miss out on our trading strategies. All right, traders, this is the strategy you've been waiting for. It's not just another run-of-the-mill approach, it's a game changer. This strategy has been tried, tested, and proven effective in the fast-paced world of Forex trading. I'll walk you through each step, breaking down the rules, the entry model, and the specific pattern you need to keep your eyes on. Stay tuned because later in the video, I'll reveal the software we use for our backtesting. This tool has been a game changer for us, and I can't wait to share it with you. The secret is easy. Recognizing a change of character is the first step. Also, keep an eye on patterns like liquidity taken from the previous high in a bullish trend, and liquidity taken from the previous low in a bearish pattern. These are your signals for potential reversals. On the second step, once you spotted those reversal pattern, the next move is to pinpoint your supply zone in a bearish setup and demand zone in a bullish setup. Quick tip. On the demand zone, we are only looking for long positions, and on the supply zone, we are only looking a sell setup. On step 3, look for fair value gaps between candlesticks. If you don't understand them, please stay tuned throughout the video to learn more. On the last step, we use what we call a confirmation candle to avoid entering risky trade setups. For example, in the demand zone, you will wait for price to trade inside the demand zone and close with a bullish candlestick. While the first pattern usually signals a liquidity taken before a change of character, things can get tricky easily. In some pattern, you will see that price will just shift quickly to make a change of character. This is what we call a shift in market structure, and this pattern is very common in a trending market. There are two simple ways to draw demand zones. On the first one, we will draw from the high of the previous bearish candlesticks to the lower low of bullish candle. Now, in the second method, if there's no lower low, use the equal low the market provides. Remember, no need to force it. Work with what the market gives you. Here on the supply zone, you will see the different way to draw the zones with accuracy. Here on the first one, we can clearly see that the bearish candlestick has a higher high before breaking lower. Then on the second one, we can see that we use the higher high of the bullish candlestick. And always start drawing your supply zone on the low of the bearish bullish candlesticks. That last bullish candlesticks will be the one that will help you to draw the zone perfectly. In this section, I'll demonstrate various methods for drawing supply and demand zones based on different market conditions. In the first example, notice how the supply zone is formed with just one bullish candlestick. This is because there's no preceding series of bullish candles before the appearance of a bearish candle. Looking at this example, here, the supply zone is formed using two candlestick pattern, driven by volume. It's important to note that the number of candles is not that important. The only thing that can break the chain is a bearish candle before the bullish candle sticks. Like from this example, we can see that we have one bearish candlestick before the two bullish candlesticks. Another important thing on this trading strategy is the fair value gap or an imbalance in price action. Usually formed during news events or market openings, these gaps often get filled by price movement. The gaps in simplest term is just a space between candlesticks. Notice on a live chart how those gaps tend to get filled. In this example, we leverage fair value gaps to our advantage, boosting the probability of winning more trades, and it will also help us to build a proper trading plan. Here's a simple trick to tackle tricky trade setups, to identify the internal lows or highs that will be manipulated. Take this bullish setup, for instance, featuring a demand zone and a fair value gap. Note how the bearish candlesticks often appear above fair value gaps. Ensure that price has traded above these bearish candlesticks, revealing liquidity resting in their lows. After this lows are taken out, price might reverse aggressively to the upside after touching the demand zone. Let's put the rules we've learned into practice in this example. Step 1. Identify the supply zone. where we aim to take a sell position. Step 2. Observe liquidity, taken before a change of character. Step 3. This is a challenge for you. Spot the fair value gap, and drop your answer in the comments section below. Step 4. Wait for price to touch the zone and close with a bearish candle. This will be our confirmation candle. No trade will be taken if price spike or trade above the zone before confirming, but what if you want a sniper entry? As long as price stays below the supply zone after confirming, use the opening price of the bearish candle to set a sell limit order. Because price has already confirmed to the downside, this will also reduce the risk from your trade setup. Lastly, secure your trade with a stop loss above the supply zone, factoring in the spread size. As we know, the market is ever-changing, so let's explore different scenarios for practical trading. In this case, the market doesn't present a fair value gap, but instead, it provides a crucial candle that needs breaking before confirming an upward move. Here's the breakdown. Identify the demand zone, our potential buy area. Then we can witness a confirmation candle. Note, however, that confirmation candle prices often dip below the confirming candle. This becomes our entry opportunity. If you just opened your charts and stumbled upon this potential trade setup, here's your action plan. First things first, draw your demand zone, clear and straightforward. Observe the fulfilled fair value gap in the market. Confirmation time. The market touched the zone and closed with a bullish candle, indicating a confirmation. Now, the easy part. Set your entry and safeguard your capital with a well-placed stop loss. While this might sound simple, remember, we've rigorously backtested this strategy for reliability. To conduct thorough backtesting of any strategy, try our favorite backtesting software. In our backtesting, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below. Before we end the video, let's dive into 2 more examples while following our trading rules. Begin by identifying the demand zone. We can also notice that the market manipulated the previous low before it can establish a new higher high. We can also see a fair value gap that the market might come to fill before signaling a potential trade. That trick for a valid higher high is visible here with a single bearish candle in the trending market. Also make sure price trades below this bearish candle before considering an entry. Confirm the setup as price touches the zone and closes with a bullish candle, signaling a potential trade to the upside. Remember, to implement proper risk management. If you like this video so far, please consider subscribing to the channel. This will also help us to make more video like this one. Also, don't forget to like the video. And comment below with the topic you would like to be covered in our upcoming videos. On this last example, we'll repeat all the rules step by step, with everything that you have learned throughout the video. On the first step, we will identify our supply zone, where we will be looking to take our sell position. We can also see a change of character plus a break of market structure. This is a signal that we might enter the market on the first lower high. We can also spot a fair value gap on the market. And to complete it all, we can see that the market touched the supply zone and closed with a bearish candlestick. This is a confirmation that we might see the market being bearish. So now all we have to do is to enter the market and put your stop loss and wait for it to hit your take profit. So traders, I guess this is the end of our video. We will see you again next time with another amazing video. Also, this slides will be uploaded in the PDF from Gumroad.